Alright traders, so time for some comprehensive outlook on Graph token, and guys, we will be figuring out why are we range bound between $2 and $1 levels, and what is really going on in terms of the on-chain analysis itself, guys. The active addresses, the number of people actually using the Graph tokens, we'll be finding that all out in this video. So guys, without any ado, let's jump on the first piece of data right here, coming from Coin Market Flow. This is a simple bid and ask profile right here. This means that your general trend for GRT markets is on a rise, guys. This is green, right? Ever since the inception of GRT, this has been getting bid in the major spot exchanges, guys, which means that your price action is certainly going to be supported onto this entire range, guys. Let's just pull this range all the way down to your 50 cents level, guys, and this entire range is getting accumulated. This is quite telling of the fact that wherever the price might go, you are in a positive MDR. You are shaping up for some good price action behavior down the line, guys, down the line, which could take months, which could take weeks. Now, the previous video, when I was talking about Graph token on the previous video, we were somewhere around $2.2 levels, right? We were trying to break out of that range, and guys, we could not do that. It was very disappointing. The whole market took a hit, and Graph token took an exceptional hit, guys. Exceptional hit. Now, for me personally, yes, my stop loss got hit and I was thrown out of the market. But guys, that was let's just say that was quite an aggressive stop loss. I should have not done that. Most likely, I should have simply held on to my hodling stash. And guys, when I re-enter the market now, I will be having less amount of Graph tokens, right? That would be bad. So basically, the point, what can you learn from this situation right here? If you are holding anything, there is simply no point setting a stop loss, guys. There's simply no point setting a stop loss. Now, I made this rule for myself and I violated this rule, guys. This was not, let's just say I'm not quite proud of it. Most likely in the coming months and the weeks, this protocol will probably do a 10x or 20x against the market. And guys, guess what? I will be having less amount of GRT tokens, right? So whatever you are hodling, you should not look at the price action itself, and you should check out these facts as a whole as to what is happening. Even if the price is going down, this is getting bid, guys. This is getting bid. People are looking at cheap Graph tokens. Let's just be very honest with that, right? So the next piece of information is from Binance Futures, guys. Binance Futures is the open interest, basically the number of short positions and the long positions in the market for Graph token. Now, ever since 18th of this month, you had a 50% drop in the open interest itself, which points out towards the fact that the market is certainly going to be undecided for these levels until we start shaping up any direction, guys. Now, open interest data is certainly not related with the price action direction itself, guys. Now, don't get me wrong right here. We could climb up on the open interest and the price would go down. That would mean that the sellers are getting strengthful in the market. That would mean that the bearish trend is emerging in Graph token. Whereas if your open interest goes to the upside and the price appreciates as well, that would be quite significant. That would mean that, yeah, your breakout most likely coming from this range is going to be real, and your continuation drive is also going to be real, right? Then we can talk about some $5 to $6 GRT targets in the coming weeks and the months as well, guys. Until then, we are situated in a range, guys. We are in a complete range bound situation. Now, this is yet another important piece of data coming from Into the Block, guys, a website which I have a love and hate relationship, as you all know. If you have been following up with the content coming from this channel, you know what I feel about this website right here, guys. This freezes the fuck out, guys. This website, when you want a lot of data coming from them, this will just simply give up, right? But just for the sake of this video, it looks to me like this is working completely fine and I can get through my analysis, it looks to me like, right? So guys, check this out right here. Now, this is the active addresses, right? Let me just go ahead and just simply shut everything off. Now, we have the price action graph and the green line telling you the active addresses, which means that people actually doing something with their hodled Graph token. Now, guys, check this out. Ever since the second week of February, this has been on a steady decline right here, which means that the real life use case for Graph token is on a steady decline as well, which is quite likely the situation, which is quite likely pointing out towards the fact that why your prices are suppressed below the $2 levels, guys. If you simply compare these assets with any DeFi protocol for that matter, if you talk about PancakeSwap, or if you talk about, let's just say, Radium as well, guys, a protocol on top of Solana. If you talk about these kind of protocols, you have an influx of new DeFi users coming into the space. You have crazy amount of new people using the protocol, using the addresses every single day, shuffling out in and out of those addresses, so making that blockchain really active, right? So guys, it is not happening on graph token. To be honest with you, this is not. This is why in the small time frames, in this current DeFi trend, most likely this will be a setback for graph token, guys. If this protocol comes up with a real life use case, and if a lot of active hodlers, they start using their graph tokens, then we can talk about some price action correlation to the upside with the active addresses, guys. Until then, this is probably gonna consolidate in this range, right? Now here comes the bullish piece of information for you guys. Now this is the total number of addresses with balance. Now guys, this has been on an exponential rise to the upside, right? Started off with 9 addresses during the inception. Well, we can simply negate the 9 addresses right here, but we can talk about how 5k addresses are currently at 55k addresses, guys. In the previous 4 months, the total number of people holding graph token has literally 10x, guys, has literally 10x. Now in terms of the price action, you did 10x way before that. You did 10x way before that, right? Now the price action is still under consolidation. It will still pick up to the active addresses. Basically the price action is a lagging behavior right now, as of now. In terms of, if you're looking at this entire asset in terms of holding, guys, this is being hodled, this is being taken away from exchanges, being put into wallets, or let's just say hodlers are completely taking the full ownership of this asset right here, and it is going away from exchanges. So prices will catch up to this entire uptrend which is happening on the active addresses with balance right here. But guys, this could take some time, this could take a while, and we can try to figure that out from the charts themselves, guys. We are talking about graph token on the daily time frame. Now guys, right off, what do I see right here? What do we see right here? We see that the 55 simple is slightly inclined to the downside, which means that your midterm trending behavior is to the downside, right? Downside or consolidation. Now why do I talk about consolidation is the fact that we can simply combine the data which I spoke about, coming from the market depth ratios and coming from the spot holdings and coming from the active addresses, guys, that have been on a stable increase, that has been on stable increase to the upside, right? So this means that the price action could be range bound all the way until these levels as well, guys. We can retest this breakout as well right here, but that would still mean that it is completely in a range bound situation, right? Now there is yet another pattern which is still being formulated, guys. This is still being formulated right here between these levels and these levels. And we simply take this line right out here, get rid of this one. Yeah, you are in an ascending in a descending broadening channel right here, guys. Most likely you could resolve to the upside in the coming days and the weeks, but until you are range bound, until you are in this channel, guys, you are simply going to head sideways, and most likely you will get reaccumulated in these ranges, right? So your risk management is going to be a very, 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 very big range, guys, because your last low was set recently and it just ran to the upside, guys. Just like I was talking about how the price action onto some key levels to the upside could be unsustainable in the small time frames, guys, some price levels to the downside in a bull run are unsustainable as well, because you simply have a lot of buyers up here. There's freaking nobody selling onto these levels, right? This is why your price pulls to the upside without you getting to know, guys, without you getting to know, right? You're looking at a price action appreciation for about 50% in the previous 3 days, guys. But guys, let's just not compare this one with the down move that recently happened, right? This was a 44%. Now the previous time when I made a video on GRT analysis, we were talking about how this formulation could be inverted head and could be some sort of upside resolution piece of price action right here, which we could not quite achieve, guys. This was a failure. This was a swing failure right here. We set in another high which was lower than the previous 2 highs, and then we are tumbling down below, coming out to some key support levels, guys. This is a macro consolidation. You don't have any FOMO happening. You will not have any FOMO situation until we are clearing these ranges, guys. This is quite obvious. Until then, the best strategy would be accumulating this one, guys. Now let's just try to find out some key Fibonacci areas of interest on this entire up leg, guys. We are taking a look at the 0.618, guys. We just retested those levels right here, right? So ultimately, what generally happens after your first wave, impulse wave to the upside, is that you would want to come back down and test some liquidity around the 382 extension right here. When you fail this one, you will eventually come down to the 618, right? So the 382 failed onto these levels. You did come down to 618, right? Now, guys, if 618 fails, you will be looking at some steep retracement all the way down to the 886. Now that would be a catastrophic move to the downside, guys. Standing onto these current levels, that would be a down move of 63%, guys. But I don't think that is a likely situation. I don't think that has to happen, because that's a far-fetched opinion. In this bull run, in this bull market, we are not looking at some crazy downside price action. Most likely, when you talk about some price action coming to the downside for all the way about 40% or 45%, guys, they are your key zones of buying interest, guys. They are your key zones of retest for the price action itself. Let's just say that. And then they'll eventually pick to the upside back again, get into the formation, and probably squeeze the fuck out for yet another week or something like that, and then resolve themselves to the upside, right? So, guys, in terms of this entire price action behavior, yes, you are squeezing down below, and you will be trending down until you make lower highs and lower lows, guys. It's pretty clear, right? It's pretty clear. Your trend is a set of lower highs and lower lows until you break this monotony to the downside or to the upside. Your trend will be in a consolidation or to a downside phase, guys. Most likely it's going to be that, right? So well, let's just talk about the recent low, guys. You just formulated a recent low with the 618, which could call out for a good reversal point, guys. This is a good piece of reversal point. Now, this is what we are trying to do as analysts. This is what we're trying to do as traders as well. We are trying to make... Alright, if we just simply go by the charts, and if we don't talk about all the analysis which I spoke about previously in this video, we can simply argue about the fact that we are taking educated guesses, guys. This is what we are doing. If we are simply doing naked charting, and if we are taking some price action levels and maybe formulating some patterns onto the price action itself, we are just taking speculative guesses with a risk management. Now, guys, regardless of the fact that whatever information I was talking about in this video, it doesn't matter, right? You anyway have to use a stop loss. You anyway have to have a risk management point, because, guys, data can be volatile as well. Let's just say that anything can happen in the markets, guys. Any uncalled for situation can present itself in front of you, and something could go down the line where this entire market as a whole could go to shit. And this is why you have your risk management in places, rather than looking at your equity just dripping down with some key levels, guys. And look, I got thrown out of the market below this range right here. I was really eyeing for this range to support the price action, which is why, guys, you had a lot of activity into these levels, right? So you can talk about the fact that this entire range of liquidity is going to be a resistance for this matter, guys, for the coming days and the week. For this week particularly, this is going to be a resistance. This is going to be a key resistance zone right here, which is probably going to be aligning with the 55 simple daily moving average in the coming days. And, guys, if you take this level to the upside, most likely you'll first retest this channel trend line, and if you do break out of this, you will test this high. And, guys, that would be the resolution. Most likely it will be the resolution, because we just tested the 618, guys. Out of this entire wave to the upside, we tested the 618. So I have a lot of reasons to actually capitalize on this information and present the facts in front of you and tell you that this could be a potential bottom, right? Which would mean that if you're looking for some swing trade or something like that, you could manage your risk below these areas right here, guys. Basically, if you start seeing any 3-day closure happening below this support line right here, that would mean that get the fuck out of GRT markets again. Wait for this one to consolidate even further, and then wait for a resolution to the upside, guys. As the resolution to the upside will come, it's a matter of when. It's not a matter of why and how, and is it going to come or not. Of course it's going to come. But it'll take its own time, guys. GRT is everywhere, guys. This is on most of the markets, guys. This is on Coinbase as well, right? So you do have a lot of potential liquidity entering the GRT markets from various exchanges. So this is a potential candidate for your potential next 10x, most likely. But for that, you have to be patient, guys. Holding is not easy, especially if you're looking at Blockfolio, or if you're looking at your trading account and refreshing that every single hour. holding is not going to be easy for you guys. People who are holding these protocols are least bothered about the upside or the downside. They believe in the tech. They are in it for the tech, man. They're in it for the tech. Although if you are taking swing trades, or if you're looking at some potential profits, if you're just swinging by, something like this could work out, right? You could define your risk management right here, and then you can eye for this high right here as well. If you take this one out, you can take a huge chunk of your position out onto these levels. But if you do break out of it, you can just simply let that position ride onto some key levels, onto let's just say $5 guys, $5 levels, right? All right. Now we're going to be making out some lot of assumptions, guys. We're going to be basically talking about assumptions from this entire consolidation range right here, right? So let's just say you're going to be taking out this high standing at $2.2 levels, right? You want to be closing daily candles above this price point right here, and then you can talk about some further extension all the way towards the 1.272 and the 1.618. 1.618 aligning perfectly fine with your $4 levels, guys. Now when I was doing analysis back in the days right here for GRT, this same piece of analysis was like this. And guys, to be honest with you, not a lot has changed. We are still looking at the same kind of range, right? We are looking at $4 breakout targets and $5.5 breakout targets, guys, from the previous video itself, right? So it's pretty clear that when you do resolve to the upside, your upside targets are going to be these and these points. Now ultimate target could be at 10.764, standing at $18 GRT. Now guys, we are standing at 1.5, talking about 18.1.64. It's just a far-fetched opinion. It's just completely, well, not out of the question, but as an analyst and as a level-headed person trying to trade these markets, it's a far-fetched opinion. So you should not divert your focus towards these levels. You should divert your focus towards the resolution of this range right here. And guys, timing this one out is not going to be that difficult because a lot of data is aligning towards the fact that this one is getting hodled, guys. This one will run out of supply onto some key levels, and when it runs out of supply, watch the price action run to the upside, guys. This is what will happen in the coming days for GRT. Until then, it's going to be let's just say it's going to be a good investment or a hodl, but don't expect returns out of this asset in the, let's just say, in this week, or let's just say this entire month as well. Got to be patient with this one. Got to be really patient with this one, right? So guys, the next chart is GRT against Bitcoin right here. Now similar piece of price action below the 21 simple on 3-day time frame, completely consolidating out of these ranges. Although you have retested your previous breakout, guys, you have really retested it, and you do want to hold this one. To be honest with you, you do want to hold this one. This is very significant. This is quite a significant. You have 4 points of contact coming in from the upside and the downside, guys. This was a complete support resistance flip out of this entire range right here. Now if this support resistance flip has to be true, your key levels have to hold. Basically, you really have to hold on to your 2500 Satoshi levels, right? You start losing out on 2500 Satoshi levels to the downside, most likely it'll tumble down below. It'll be a constant down move against BTC, guys. That would not look good on GRT. Basically, that would mean that you're completely fine holding Bitcoin itself rather than holding GRT. Because if GRT goes to shit against BTC, guys, it would not really matter whatever your USD pair is doing. You would be missing out on the opportunity cost, guys, which is determined by the BTC price action itself. As all the cryptocurrencies, apart from a few cryptocurrencies which are completely stablecoin based DeFi ecosystems, they do not deal with Bitcoin itself. They don't have any trading pairs in Bitcoin itself. So guys, all the cryptocurrencies are measured in BTC, guys. They are measured in BTC, right? So if your BTC value for any crypto goes down, that would mean you simply have a better opportunity cost simply holding on to Bitcoin itself, right? That would be the logical argument to this entire sentiment right here. So if it goes to the downside, don't be disheartened. Just if you do have a lot of, let's just say if you have a huge bag of GRT, guys, most likely if you are resolving this one to the downside, you can simply sit on to Bitcoin and pick some GRT back up for some 30% discount, guys. 30% more GRT up your bag, right? If you lose out on this level right here, well, if I take this move right here, you could have, well, 27-25% more GRT, right? So guys, this is a key critical level that we're dealing with on GRT against BTC. Let's just confirm this one by the small time frames as well, like the daily. Now the daily moving averages are completely bearish, guys. This is the bearish cross right here. This is why GRT has not been able to perform, because the BTC pair has a bearish cross on the daily time frame, right? You have the 55 cross to the upside, which means that, yeah, you are bearish and you're inclined to the downside on both of the moving averages right here. which further confirms the fact that yeah, you are bearish in terms of price action. You will get distributed as far as you stay below this particular high right here, which was lower than the previous high, guys. This is looking to be like a key significant level right here. If you take this one out, basically if you resolve this channel to the upside, then you can start talking about a trend finally shaping up, and then you can talk about some further explosion on GRT USD as well, guys. Well, until then you got to be patient and hold on to these levels, to be honest with you, right? So GRT against Ethereum, that is going to be a last candidate for this video, not the candidate, guys, the last piece of chart for this video, right? Now, this was quite expected. Guys. Ethereum has been on a complete rip to the upside, guys, which is why most of the altcoins are going to be really weak against Ethereum. This is quite telling of the fact you broke down all out of this key level. And guys, me personally, yes, I was looking at GRT against Ethereum, as I was looking for this level to particularly hold up. This would have mean that GRT would have been a better investment rather than Ethereum itself, but it looks to me like market took a complete different direction. And guys, look, you have to flow like water if you are actively participating in these markets. If you are looking at these kind of videos and content coming out of YouTube or any other person trying to tell you something about these markets, then you have a time value for your capital as well, guys. Now, what do I mean by time value? Guys, your money would have been better off sitting at Ethereum after this breakdown right here, right? And then that would mean that if you flipped out back into GRT, you would have had 30% more GRT, right? So this trade has actually gone, this one has gone. You would have had better chance of accumulating more GRT against Ethereum, but it looks to me like you do have your wave down and your easy part of the move has played out, right? So guys, let's just hope for some consolidation onto these levels where GRT could start picking up against Ethereum and Bitcoin as well, and then we can talk about some further explosion move to the upside, right? Until then, we could be looking at some deep retracement coming at your 886 levels, guys. We lost the 618. We simply lost the 618. This is why your breakdown was very significant coming from this level right here, and we are paving our way towards 886, guys. Most likely you will come here, and guess what? If you are not able to resolve yourself here, this would mean that Ethereum will probably get really strengthful against GRT, and guys, it would be better holding Ethereum itself. Now, am I biased towards Ethereum? No, I'm not. But I'm looking at facts, and I am looking at the things which are better for my equity rather than being emotionally involved in GRT or something like that, right? So guys, wait for the resolution. I think you are not going to be resolving right here. I think you have more downside coming from GRT against Ethereum. Most likely Ethereum in the coming weeks, to be honest with you, until you're not resolving this 618 to the upside back again, Ethereum is going to be a better hurdle than GRT itself, guys. All right, I guess I'm going to be winding this video up right here. Let me know down in the comments, what do you feel about GRT in general? Do you hold GRT in spot exposure, or do you take positions in GRT for derivative market, guys? You can simply share those thoughts as well down in the comments, and join the Discord community, guys. Join the Discord community. Links will be down in the description, and I'm gonna catch you guys on the next video pretty soon. Bye for now.